Thank you for joining GNCC's Espresso Live on this critical topic of business financing. Organizations understand that transforming a strategic plan into reality requires more than just a great idea and a great team. It demands access to adequate funds. Today, we'll explore how business loans can alleviate financial constraints and unlock opportunities for business growth and success. Did you know that approximately 33% of small business owners struggle due to a lack of funding? This statistic highlights the pivotal role of business loans. Indeed, business loans have become the go-to financial solution for owners seeking to overcome financial hurdles and realize their ambitions. However, it's important to recognize that securing business financing can be challenging. And unfortunately, this challenge is often greater for entrepreneurs in diverse groups, including Indigenous people, women entrepreneurs, newcomers to Canada, visible minorities, 2S LGBTQ+ people, and people with disabilities. And this is why Meridian Credit Union, with the support from BDC, has created the Business Accelerator Loan. Throughout this webinar, we'll delve into strategies for tools that are available to organizations, to you, of ways to overcome some possible financial challenges and above all, foster inclusivity in the business community. So I thank you very much for joining us, and let's embark on this enlightening exploration of business financing together. But first, let me acknowledge that this webinar is powered by Meridian Credit Union, Ontario's largest and Canada's second largest credit union, helping to grow the lives of more than 370,000 members. Throughout their 89 branches and 15 business banking centers, they are providing services provided by their 1,900 employees who are experts offering financial products and services to businesses and individuals. But in addition to that, and especially here in Niagara, they are committed to investing in the communities they serve. For example, 50% of their employees support over 425 community organizations annually, and that goes also for nonprofits and charities. So from all of us, thank you for all that Meridian does actually for the community and for individuals. So now let me move over to actually introducing our expert panelists. We have with us this morning Brian MOCHA, a graduate of Brock University with an honors in business administration with a concentration in finance. He's an employee of the Meridian Credit Union. He has held a variety of business banking management roles and is currently the role of Director of Program Lending for Business Banking. Brian's past volunteer experience has included 14+ years with Bethlehem Housing Support Services, which has included roles such as a finance committee member, board director, and a 5-year stint as part of the executive team serving as the treasurer. Brian, thank you for being with us today. And Brian is joined by Chelsea RIDOLFI, who spent the past 7 years as a Meridian team member working for a branch corporate office, assisting small businesses with their financing needs. Her responsibility as a senior small business advisor include lending, investing, onboarding new members, and cash management. Chelsea combines her education, experience, and love for working with people to help members identify needs and come up with a proper solution together. Chelsea provides exceptional member experience, and we're really glad that she is with us today. So thank you to both of you for being with us. And to all of our participants, let me give you a little bit of an overview of today's format. We're hoping the format to be really interactive one. We always have found that you get the most out of our webinars when you have a chance to provide us with your question and hopefully move forward some of the obstacles and challenges that you might be facing. We're going to start out with an overview of what this specific loan that we're talking about today, and then it's followed up by our Q&A session. Many of you have already provided us with questions, and we're committed to getting to all of them. Please utilize the chat function for any additional questions that might be coming up during the initial part of it, the 20-25-minute presentation, or while we're actually going through the Q&A session. Your questions make a difference, and we hope that we have all the answers here for you. Please know that this session is recorded, and we will be sharing this recording with all participants at the end of it, and it's also going to be available on our YouTube channel. And lastly, additionally, if you want to enable live transcript, that option is available on your Zoom screen. And if you have any difficulties finding it or any other technical difficulties, just send us a note in the chat, and we will most definitely get back to you immediately. And on that note, it's my great pleasure to actually hand the first half of our webinar over to Chelsea and Brian. And on that note, I'm going to start out with Chelsea. Over to you.
Thank you, MISHKA. Good morning, everyone. Today, Brian and myself are here to discuss the Accelerator Loan Guarantee Program that Meridian offers in partnership with the BDC. And here we are. Okay, so today's agenda, we will tell you a little bit about Meridian, our purpose, underserved groups, and then we will talk about the Accelerator Loan Guarantee Program. Okay, so Meridian is the largest credit union in Ontario, and we are a 100% member-owned financial institution with more than 75 years of banking history. We are one of the largest credit unions in Canada and a leader in the national system with representation on Central One Board and Board of Credit Union Central of Canada. As MISHKA said earlier, we have 15 business centers, 89 branches across Ontario, helping 27,000 plus business members and 370,000 plus members total. We have access to 3,700 ABMs, and we have 24/7 online and mobile banking. As of our fiscal year 2022, 26.2 billion in total assets and deposit base of 18.5 billion. We also have two subsidiaries, which is Meridian One Cap Credit Corp and Modus Bank. Why should you choose Meridian? Meridian has a full service checking and savings accounts, credit cards, cash management solutions, investments, mortgages, loans, alternative financing options, and more. We are owned by our members and we only work for you, meaning that we take all profits and return them back to you in the form of better products and services. 4% of Meridian's pre-tax earnings are invested in charitable causes through our Commitment to Communities program.
So I want to start with, why are we here today? So really, our goal at Meridian is to really help that all entrepreneurs have all the support that they need to be successful and grow their business. One of the most important functions of being able to provide that support is to be able to have access to affordable capital, first and foremost. So this program that you're going to see today is all about increasing access to affordable capital for small and medium-sized enterprises. Secondly, throughout our dealings with entrepreneurs in this program, we want to be able to enhance business acumen and really bring forward and improve the financial capability of all entrepreneurs that we deal with. We want to help build connections. The more folks that you know, the more people that you know, you might meet suppliers that you can deal with, other customers refer to other customers. And lastly, we really want to increase the knowledge of entrepreneurs and the trust that they have in us as a financial institution. So MISHKA mentioned this at the top of the presentation. Really, the genesis behind the Accelerator Loan Program is providing access to affordable capital for the underserved groups in our communities. The green box here on the slide really kind of outlines, the groups that this program is geared to. So it's your women-owned businesses, it's your newcomers to Canada, it's your visible minorities, it's the LGBTQ plus communities, and the Indigenous owned communities. I mean, there's lots There's lots of articles, lots of information, lots of data out there that really shows that these equity deserving groups have a far more challenging time accessing capital than those entrepreneurs that don't fall into these groups. How we are going to provide additional access to capital, affordable capital to these groups, is really we're going to move up our risk curve and widen our credit box. And that's how we're going to get more funds into the hands of these underserved groups. Now, I do want to be clear, even though this program is geared towards these underserved groups, this program is for everybody. So if you don't fit what's in this green box, that doesn't mean that you don't qualify for the program, but the absolute focus of this program is the underserved groups that we've got outlined here, and you'll see later in the presentation how we're going to try to ensure that we achieve that. So Meridian was one of 4 financial institutions across our country participating in this, what is a pilot program, this Accelerator Loan Guarantee Program. Frankly, we were, it's a privilege and honored that Meridian was chosen as one of 4 of the pilot FIs. The intent is that it's an 18-month pilot, and then after the pilot period ends, that this program will be launched and be available to any other FIs across the country that would like to use it. I'm quite happy to say that Meridian was the very first FI across the country to launch this program. We launched it in late October, and only one other financial institution has managed to launch. Actually, it was very recently, which I think really speaks to, our corporate strategy, how important this mission is of getting affordable capital out to these underserved communities. And I think it also speaks to just how nimble Meridian is, how fast we move, and how quick we can get things done for our membership. So with that, I mean, what does success look like? How do we, at the end of this, say, yeah, we've achieved our goals here? Well, first and foremost, it's delivering that capital to the undernourished businesses to help them flourish. That's really first and foremost. Second criteria that we're really focused on is reaching those underrepresented businesses that I mentioned in the last slide. And thirdly, we want to make sure that the program is easily scalable, to MISHKA's and Chelsea's earlier point. We've got 89 branches. We've got a footprint across Ontario. We want to make sure that this program resonates across all of our members and the entrepreneurs across the province. So what is it? Well, the Loan Accelerator it's really an indirect loan guarantee program, and the whole intent of it is to provide additional liquidity to help the underrepresented small and medium-sized enterprises across the province. Some quick program specifics. This program, it's working capital term loans. They can start as low as $25,000 and go up to as much as $500,000. It's a non-revolving term loan is your lending vehicle. As far as security goes, it's secured by a first position GSA and personal guarantees. So for those that may not know what a GSA is, it's short for a general security agreement, and a general security agreement is essentially it's a registered charge on your non-real estate assets. So that's like your accounts receivable, your inventory, equipment, items like that. Key feature here: loans cannot be used to finance existing debt. Any debt that you take on in this program has to be incremental to debt that you already have. And all of these loans are secured by a BDC guarantee, which ranges between 80 and 100%. And I'll get into a little bit more of that in the next slide or two. Lastly, I just want to say that this program relies on Meridian's underwriting, Meridian's due diligence processes. So even though BDC is kind of in the background, as a government entity providing a guarantee to these loans, it's Meridian's pen, it's Meridian's program, it's everything, the majority of the program, it's all about how we're running it, how we're operationalizing it internally. We don't have to run to BDC to get approvals for loans. It's all done in-house, and it's all done very, very quickly. We've got a real slick process around it. So let's talk eligibility criteria for a moment. So what do you need? What do you need to show to come in and apply for one of these accelerator loans? First off, this program is for emerging and established businesses. This program is not intended for startup businesses. When you're out and you're looking for traditional funding from financial institutions, typically a financial institution is going to ask you for multiple years of financial statements. And that's really to show a trend, right? That you can achieve certain revenues, certain profits, certain ratios over continued years. What makes this program great is that you only need to show that you've been in business for 12 months or greater. So for those businesses that are a little past startup, have a year under their belt, could show 12 months of financial statements or more, this program could be for you. As I mentioned earlier, this is intended for small and medium-sized enterprises, and we define that with a revenue cap. So there's a ceiling of $10 million if your business generates more than $10 million in annual revenues, you're outside the parameters of the program. So this program is truly for the small and medium-sized enterprises. The program is open to a plethora of sectors and industries. What I've got here on this slide is really the list of sector exclusions. So there are a few sectors that won't qualify for this program. I'm not going to run through these line by line. You can see them there. And I will say, for the most part, there's some usual suspects on that list, right? There's a lot of high fraud in a number of these categories. I think two that are worth calling out that maybe wouldn't strike you as a usual suspect is nursing facilities and the construction, development, or sale of residential properties. So again, you look at this; those are two that this program doesn't qualify for. If you're working out of an industry and you don't see it on this list, you work in an industry that fits for this program. The last thing I kind of want to mention on this slide is that it's a strategic partnered marketing approach with BDC. It's kind of a first of its kind where, if you've seen any of the marketing that we've got on this, it's really partnered marketing with BDC. So even though it's Meridian marketing, you will see a little BDC logo in the corner of our marketing as BDC is backstopping these loans with a guarantee. So it's been great to have a number of different heads at the table to come out with some of the great marketing materials that we have today. So let's talk program features. I mentioned this earlier. These are term loans. It's not revolving debt. It's a term loan vehicle. Again, the loan size can be as low as $25,000, as high as $500,000. As far as interest rates go, it's up to prime plus 5.5, and I say up to because that doesn't mean that the rate is prime plus 5.5. But what I would like to mention is that in response to BDC providing us with a guarantee on these loans, which is allowing us to expand our credit risk appetite, move up that risk curve. We are remitting 2.5% of interest of every loan that we advance to the BDC. So what does that mean? If we issued a loan at prime plus 2.5%, that spread over prime, that 2.5%, that money's going to BDC. So just to give you a sense, 2.5% of every loan, of the interest of every loan that we give out goes to BDC. As far as amortizations are concerned, it's up to 6 years. So it's working capital loans up to 6 years. And the BDC guarantee is really quite interesting. So I mentioned earlier, it's from 80 to 100%. So in year one of a potential 6-year amortization, the loan is 100% guaranteed by the BDC. In years 2 and 3, that falls to 90%. And then for the final 3 years, it's an 80% guarantee from BDC. There is a one-time 1% registration fee on the authorized loan balance, and this fee is also, Meridian doesn't collect that. We collect it, but we remit that to BDC as well, so that doesn't go into our pockets. And I'd like to say too that, you know, Meridian has a very exciting, I'll call it a switch. It's called our switch program. And I'm not going to go into too many details about the switch program, but the whole intent of the switch program is to put some money back into the pockets of entrepreneurs that have switched financial institutions and have maybe come from, you know, Scotia or TD or a bigger FI and come to Meridian. And for small businesses, we will reimburse up to $2,500 of the costs that you have incurred to switch financial institutions. And why I'm mentioning this is because that 1% registration fee, we cover off as part of our switch costs. So it is possible if you're switching financial institutions that, that will cover that 1% registration fee for you. As far as the use of proceeds are concerned, again, just want to reiterate, it's working capital loans. It's obviously funding the cash flow needs of your business. I mentioned before that these loans, you know, it has to be incremental to existing debt that you have. So, you know, you cannot pay out an existing loan that you have and replace it with this loan. But let me just go through a quick hypothetical scenario. Let's say you had a line of credit of, I don't know, $50,000, and you bought a bunch of equipment in it, or you used it for working capital for your business. You've maxed your line of credit. You need additional capital. You could come to us. You could, you know, get one of these loan accelerator loans. You could take the proceeds. Let's say you got a $50,000 loan accelerator loan. You could take those proceeds, apply them to your line of credit. And as long as the limit of your line of credit, like that $50,000 limit, didn't decrease, that is a perfectly viable use of proceeds. Now, conversely, let's say you had a $50,000 line of credit, it was maxed, you got a $50,000 loan accelerator loan, you applied it against the line of credit, but that line of credit limit drops by any amount or drops to zero. That wouldn't be an acceptable use of the proceeds, because you would effectively be exchanging one type of debt for another type of debt, which would be the loan accelerator program. We've broken this program up into 2 segments. We've titled them segment 1, segment 2. Surprise, surprise. So segment 1 are loans that start at $25,000 and go up to $100,000. In this particular segment, there is no DSR test required. So what is a DSR test? Well, DSR is short for debt service ratio. It's a test that any typical FI would run when an entrepreneur comes in and looks for financing. And essentially what it is it's taking your profits and your depreciation and your interest costs, and it's dividing them by your debt load, whatever payments you have to make in the year. And generally speaking, when you're looking for capital, you need to show a debt service ratio test of 1.25 times or greater, or you'll find it very difficult to get traditional financing. Why this program is great, you know, talking about moving up that risk curve and opening up our credit box, there is no debt service ratio test required in the under $100,000 segment. The quantum of the loan is determined by a modified matrix formula, which I'll show you on a subsequent page. And lastly, we do have to run the financial statements through a Moody's default test. But I'll say this: if you fall within our grid that I show you on the next page in this segment, you are going to meet that Moody's default test. It's just the way we've set it up and the way it works. Now, let's say you're looking for working capital debt that's in excess of $100,000. That falls within segment 2. The criteria in segment 2 are: there is a debt service test, and it's a test of 1.1 times or greater that you have to show, which is a little better than your standard test of 1.25 times. But there is a test there, and again, there is a requirement that we run a test based on the financials we provided through a Moody's default test to make sure we hit threshold Moody's default ratios as outlined or as established in the program guidelines. So, you know, the takeaway here is really, if you're looking for a loan under $100,000, it's simple. It's simple. There's not a lot of tests. The program's really been geared for those small business-sized loans, to getting as many of them out the door as we can, really increasing access to affordable capital. So this is the grid I was talking about. There's 2 grids here. So, you know, I've said a couple times, you know, we're going to move up the risk curve. I've said a couple times, you know, we're expanding our risk appetite. We're expanding our credit box. What does that mean? Well, you know, in this slide is where you can really see what that means. And the first thing I'm going to say before I kind of go into numbers, I know there's a lot of data, a lot of numbers on the screen, is the bottom grid here is like our existing in-house matrix grid. The top grid is our accelerator grid. So without, you know, looking at any of the axes here, I mean, one thing that you notice in the bottom grid, there's a lot of red boxes. You know, red's generally not associated as a good color when it comes to banking. You see a lot of zeros in those boxes. I mean, in our typical matrix financing, if you fall within those boxes, you don't meet the credit parameters that we're looking for. You move up to the top grid, which is the loan accelerator grid. You can see how we've shrunk the number of red boxes. So in a visual aid right here, you can see how we've expanded our credit risk appetite. And the other thing I want to say is, if you're looking at the grid below, you can see that our quick matrix grid, you know, goes up to as high as $50,000 in the bottom right quadrant. You move up to the loan accelerator grid, and you see that we've doubled that up to $100,000 in the bottom right quadrant. So 2 big takeaways here is, one, we've opened up our credit box for a wider batch of entrepreneurs just by virtue of having less red boxes. And in most instances, we've more than doubled what we're willing to lend to the entrepreneurs that fall within these grids. So very, very, very exciting. And I'll tell you that year to date, you know, the proof's been in the pudding, and we've just seen, you know, how well this program's been going and how well we're reaching more of not only the underrepresented demographic, but also just a wider swath of entrepreneurs. From a security perspective, you know, I kind of touched on this before. I'll run through this pretty quickly again. In all cases, we need to hold a GSA, and we need to be the primary lender with the first position GSA. Pretty straightforward. We're also taking guarantees from all personal and potentially corporate shareholders, provided that the personal and corporate shareholders hold a minimum 25% interest in the borrowing entity. And then in total, just all of the guarantees that we take have to aggregate to a minimum of 100% of the loan. Makes sense. BDC guarantee we talked about, 100% year 1, it's 90% guarantee in years 2 and 3, and again, it's 80% for the final 3 years. There's 2 other documents that are Accelerator Loan Program specific documents. They're called a waiver form and an eligible borrower's declarations and obligations. Essentially, these are documents that are attestations. It's an attestation that you as an entrepreneur or business owner would sign. And written within that attestation, it says, you know, my business does not operate within one of the excluded sectors that we mentioned earlier. You know, I'm agreeing that I'm using these funds for working capital. You know, I'm agreeing that, you know, this fund isn't going to pay out existing debt. Items like that. So essentially, we rely on that attestation from the entrepreneur that you're, yes, stating you're gonna meet those metrics. And that's essentially it from a security perspective. So let's finish off by talking about how do we apply for one of these loans? How easy is it to apply for one of these loans? I mean, step one is you reach out to Meridian. We've got an online intake form on our website. You could take 2 minutes, not even really a minute, to fill that out. You fill that out, comes into a general email box. We reach out to you. You can reach out to somebody like Chelsea RIDOLFI on the line, who's well versed and is quite great at walking members, prospects, and entrepreneurs through this slick process. Once somebody like Chelsea determines that yes, your need fits the spirit of this program, the second step is that we ask you for 2 things and 2 things only: a personal net worth statement and the most recent financial statements that you have, whether they are review engagement, notice to reader, compiled, maybe you're a sole prop and you've got tax returns. We need a minimum of 12 months. It's a requirement. We will ask for 2 years if you have it. If you only have 1, that's great too. We'll take that. But the biggest takeaway here is that's all we're going to ask you for. Two pieces of information. That's all we need. Once you know, we've run a quick check and pulled a beacon score and made sure that your beacon runs into that, you know, hits the chart that we showed you on the last page. The next step is we're going to send you to actually a BDC website, and you're going to fill out a voluntary self-identification questionnaire. And why that questionnaire is important is it's going to ask you questions, whether you're, you know, part of the LGBTQ plus community, whether your business has Indigenous ownership, et cetera, and that data that you put into that form is really what's going to help us try to stay on track to ensure that this program is meeting the needs of these equity deserving demographics that we went through before. So Meridian will never see explicitly what you put in the form. We will get like a high level overview from BDC. We'll get periodic reporting that kind of says, hey, is this program meeting the needs that we've expected it to meet? And this data is great because, like I said, it'll try to keep us and BDC on track with the program. And if the program, you know, wasn't meeting the needs, we would make adjustments to make sure it is. I can tell you that year to date, I think 75% of all loans that we've done through this program have hit those underserved demographics. So check mark, you know, we are hitting the population that we're trying to hit with this program. So we're very, very excited about that. And then lastly, step 4, you receive your funding. I'm very proud to say that from, you know, the moment that you go to like Chelsea and you say, here's my personal net worth statement, here's my my financial statements, we've got about in total a 48-hour turnaround or potentially less to write the application, approve the application, get fulfillment documents together, and then turn around and come back to you and say, here are the documents for you to sign. So, you know, maybe not as fast as a fintech, but, you know, a fintech, you know, they're going to charge you, you know, 18%, 20% interest. the pricing's, you know, reasonable here. The turnaround time is incredibly fast, and it's easy. It's a real easy and slick process. So with that, I think ready to turn it over for some questions, if anybody's got questions.
Ryan, thank you so very much for the presentation. And thank you for closing the document as well at the same time. If I look at and have listened to your presentation, I think there's 4 highlights that I would take away. So one of them is initially it's an equity deserving groups and individuals where the focus is on, and congratulations to Meridian Credit Union for actually 74% of it fitting into that criteria as well. I think that really speaks to the importance of this particular loan program and the difference that you can actually make in the community. So thank you very much for that. I think Meridian and with the help from BDC has buried and lowered the barriers for approval. You have improved the turnaround time at the same time, and that there is a preferred rate overall that is available for those seeking a loan. So thank you very much, and I think it's really greatly appreciated. There's a number of questions during your presentation that has come forward, and also prior to it while we actually had promoted this webinar. So I'm going to go into some of them, and I hope we can get actually to all of them. Initially, one of the questions that people have had, you've touched on it, Brian, but maybe either if you or Chelsea want to look at it and saying, how does it differ from traditional business loans and lines of credits? I think we talked about the turnaround time. We talked about the equity seeking individuals and groups that it's being focused on, a preferred rate. Anything that I'm missing when people are asking this question? And maybe at this point, if I bring Chelsea into the conversation, anything that maybe we need to share different than a line of credit or another business loan?
Yeah, I'll fire away first, MISHKA.
Yeah.
So these loans, we've really just opened our credit box. So we are reaching a whole larger demographic, and you kind of saw that when I showed those grids, how, you know, you may have a lower score or lower beacon score, you can still get into this program. We also aren't looking for a debt service ratio test. So what really, I don't want to say I mean, it's an obstacle, especially for a business that's experiencing growth, that's early in its year. It's not a startup, but it's maybe in year 1, finished year 1, year 2, year 3. It's not yet generating the cash that it may need to generate to show that it can service the debt obligations. But you might be close, right? You might be one new product line away from crossing that hurdle. This program is designed for those entrepreneurs in mind, and it's really those equity deserving entrepreneurs that, you know, they don't have the family wealth that they can put in their business, that need that help to get them from A to B. So really the biggest thing for me is, the process is shorter. We've really simplified it, but there's less hurdles to jump through to get one of these loans than there is a traditional loan.
Excellent. Thank you very much. There's also a question that has come forward, and now I'm going to kind of have a couple of rapid questions that are just very particular on this one. You had outlined, or in your outline, it indicated the sectors and industries that are excluded from applying for this one. It mentioned charitable organizations, and there was a question that had come forward about nonprofits. And I was wondering if someone can maybe speak to that, to seeing if nonprofit organizations are able to apply.
Yeah, so nonprofits are excluded, and one of the requirements that we need from a security perspective are personal guarantees from all of the shareholders. Your typical nonprofit, it doesn't have business owners, right? It's got directors. You don't have that person standing behind saying, I'm on the line here. So this program wasn't intended for nonprofits. However, it was intended for those entrepreneurs that fit within those underserved demographics that own their businesses. Yeah.
excellent. Thank you very much. Another question that has come forward is how important is it that the business is located in Ontario? What if the head office might be located in Alberta, might be a number of branches and others that are part of the business? And so there was a question around that. How important is it? Is it being taken into consideration? Does it disqualify someone from putting their name forward? And maybe yeah.
Yeah, so good news and bad news. I mean, the good news is this program is a national program. So whether you operate in Alberta or New Brunswick, as long as your footprint's in Canada, you know what, this program could be for you. The bad news is like Meridian Credit Union, we operate in Ontario. So we are an Ontario-based credit union. You would have to operate out of Ontario to fit this program with us.
Okay, that actually makes sense. I'm going to bring Chelsea into this conversation here as well. One of the questions that have come forward is, can a borrower repay the loan early without any penalty? Is there any advantages towards repaying it early? And I was wondering, Chelsea, if you can give us your take on that.
Yeah, absolutely. So it is an open loan, which allows the members to pay principal plus interest payments. But that also allows our members to pay it off at any time without a penalty as well. Is there really a benefit to paying it off early, other than the fact that they're cutting their interest requirements that they'll be paying month over month? That's really they can continue to make their monthly payments and there would be no issue if they don't still pay it off early.
Yeah. And Chelsea, while we're talking about interest payments, there have been a couple of questions coming in. Prime is, I believe, at 7.2% right now, plus the 5%. That's the interest rate that people are looking for. Am I correct with saying that? Or is the person who's asking correct with making that assumption?
Yeah, that is correct. The prime rate is 7.2 and the rate for this program is posted at the prime plus 5%.
And it's up to prime plus 5. So that doesn't necessarily mean that your rate is prime plus 5. But that's as high as we actually can't go above that in the program. Conversely, on the other side is if we went below prime plus 2.5, we wouldn't be getting credit for a prime loan because of what we remit to BDC. So that's kind of your range. It'll be anywhere from prime plus 2.5 to prime plus 5.
No, but I think that sounds perfect, actually. And I think it clarifies it for people in attendance too, who are not working with those numbers every single day and maybe have also not considered this particular loan. Chelsea, maybe if I can ask you, can a single borrower, a single organization apply multiple times for the Accelerator loan? And so this is the question, maybe they're applying for it now, maybe they paid off, they can apply for it again. Would they qualify for that? Chelsea, if I maybe can ask you.
I believe they would be able to apply again. Brian, can you step in? Do you know more about that?
Yeah, absolutely. So you could apply multiple times. The only restriction is that the aggregate of the loans never exceeds $500,000.
That makes sense, actually. And then actually there is a similar question, and these are all technical questions, but I love those ones, and I think they give clarity for the individuals that are with us today. If someone owns multiple businesses, can each business qualify for the maximum loan amount or for a certain amount? And it's in the similar what we have asked in beforehand, but in this particular case, we know a lot of individuals that own more than one business. The individual entities set up separate from each other. Can they qualify? Can each of those businesses, could they qualify for the maximum loan amount?
So this is a really good question. It's come up once or twice. Let's say that Chelsea was the 100% owner of 3 different businesses. The maximum loan that Chelsea could get as the primary shareholder is $500,000. So she could apply under each of the businesses, but she wouldn't qualify for $500,000 under each of the businesses. It would have to aggregate to $500,000.
Very good. Excellent. Chelsea, is there an end date for applying to this program? I know Brian had indicated was an 18 months pilot at this point that is taking place. I think you started it in October of last year, if I'm correct. Is there an end date to it?
Yeah, I can take this because I deal more closely with BDC. Short answer is no. So when the pilot's over, the plan is to launch to everybody because we're part of a pilot member. When our pilot runs out, we'll just transition into a non-pilot phase where we're issuing this out to folks. So for all intents and purposes, no, there is no end date. We see it as transitioning straight from a pilot to a non-pilot, and the program's just available.
Yeah, I think that is excellent. And I think that is good to know. And your early results show that there is a lot of support and a lot of demand actually for that particular loan as well. Chelsea, you have dealt with businesses directly. Individuals are asking, I think everyone always asks, would I qualify for it? But maybe if you can give us a little bit of an overview, what industries or types of businesses are best suited for the program. So when you have dealt with individuals, and you look at it and say, like, here are the ones that are specifically where it works. And maybe it's not sector specific, maybe it's the size of business where you find this is a good opportunity.
So basically anybody can apply other than the slide that Brian had showed earlier of the sectors that have been excluded from the program. If you don't find yourself on that list, please reach out to one of us. We can discuss the business type with you and make sure that you do qualify based on what you need to use the funds for and all things like that. Obviously, if you did show up on that slide of excluded sectors, that your chances are obviously much lower, but still reach out if there's a gray area, if you're wondering if you fall into that category or maybe a category that does qualify. Either way, we're happy to chat and see if there's something that we can do. And again, like Brian said in the presentation, we are geared to small and medium-sized businesses. So as long as you fall into those categories, we're happy to help.
That's excellent. And your definition of a small or medium-sized business, is it aligned with the Canada's definition that is on size of employees of the organization, or how do you define them?
No, that was based on the maximum revenue that Brian had included there in the presentation.
That's the one. Okay. That's actually good for people to know because many people use different criteria at the same time when we talk about that. So thank you for clarifying it. Brian, I saw, did you want to comment on that as well? Or
Chelsea nailed it. Yeah.
Okay, very good on this one. Brian had stated in as well the use of the funds, and there are a few questions that have come forward, and I was wondering if we need to dive into this a little bit more, because so many people look at it and say, like, we need it for all these purposes, and we understand that you can't do it to pay off another loan that you have, and especially, which makes sense. It's just exchanging one for another. But can you, Chelsea, maybe expand a little bit on the purposes of it, or if there are any restrictions and how the money can be used?
Yeah, so it's exactly like you said, the money can be used for working capital. So whatever the business requires their working capital additional funds for, as Brian said, if you have a line of credit that you're looking to apply the funds to pay off the line of credit, you can absolutely do that as long as you're not closing out any facilities. So we can't use the funds from this program to pay out other loans, but you can use it to reduce the balance on the line of credit as long as your overall limit is not being canceled or lowered. So yeah, anything that you require funds for working capital, you can use these funds for.
That's excellent.
Yeah, I'll just add, what maybe it makes it simpler if you're looking to buy like one specific piece of equipment, this isn't the program. If you're looking to buy land or a building, this isn't the program. But if you're looking to expand your inventory, you're looking to add a new product line, you're looking to hire another employee, you're looking to make amendments to your storefront, anything, like working capital is such a large category. It's really, as long as you're not planning to go out and buy a single use asset, then it'll work. Working capital is very broad.
Yeah. Actually, and I really appreciate it from both of you, actually, the explanation and the definition around it, because it does give significant clarity to everyone actually listening in at the same time. You have this opportunity with launching this loan and this program to connect with people in ways that they might have never connected with Meridian Credit Union before, and I never had considered actually talking to you. So for those individuals who may be interested in receiving the Accelerator loan, but also at the same time want to know more of the resources that are available at Meridian Credit Union that you provide to businesses. I was wondering if you can touch on that, because I think often you start a conversation around one topic and then it leads into other opportunities in different ways that maybe you can support a business. And I'm not sure, Brian, if you wanted to look at that and saying, oh, Chelsea, you do, of other services that Meridian offers in support of businesses.
Yeah, so this is what I do in a regular basis, so I'm happy to speak on this. So we do have many services that help support our members on a regular basis. Between programs like this, what we're offering, we have different programs through Canada Small Business, different things like that. And then we have your regular day-to-day lines of credit and Visa cards that can also assist. We have found with these applications, we're doing one of these loans, but also maybe a small line of credit or Visa to go with it as well, just to assist the business in a well-rounded perspective. We have many other services. So another example would be our cash management services. So we offer a business online banking platform, which increases a lot of the limits that online banking doesn't traditionally allow you to do. So as an example, members can e-transfer up to 25,000 in one day just by using this platform, where typically it would be a smaller limit like 5,000. And they also have the ability to send their own wires. So a lot of our members have found this to be very beneficial. Instead of having to go into a Meridian branch each time, they can set it up online so that they can send these wires that they're typically sending within Canada or US this way. So that is a really great option just to assist your business and make your life a little bit easier. We do also have a platform called Automated Funds Transfer, which a lot of our members use for either payroll or if it's a not-for-profit, they use it for collecting their donations. Even collecting rental income if they have multiple rental properties, different things like that. And I will say one of my favorite benefits that Meridian can offer is that you have a designated business representative that is assigned to you. So when you need help, you're not calling into a number and you're going to get somebody different every time that you call. You can call your rep directly, and you actually have our cell phone number. So that is the phone number you're calling is attached to us at all times. During business hours, of course, you'll be able to get in touch with your representative. And finally, our business representatives do have a lot of relationships with other professionals such as lawyers and accountants, and our partnerships with the GNCC and other chambers in their area that we work with directly, and we can refer you to if you need assistance with decision making or planning for your business or just building other relationships and things like that.
I think that's extraordinary, Chelsea. So thank you very much actually for covering it, because I think this is really what people are looking for right now. But I wanted to actually say congratulations also for having that direct contact and the name and the person attached to it. I think we hear from so many people in today's age, we see less of that, significantly less, and automation, AI and other options all being explored. But I think there's still a lot of people, and especially when you talk about your own business investment, would really appreciate that one-on-one contact and that connection with someone. So really, really appreciate it. Brian, you had touched on the repayment terms, but there's a couple of questions where people are saying, can you clarify a little bit around the Accelerator loan and the repayment terms that are anticipated with it?
Yeah, so it's up to a 6-year amortization that you have to pay it back. It's floating rate loans. It's only floating rate loans. So the upside of that is you could pay more back than you're contractually obligated to pay because there's no prepayment penalty for paying it off sooner. All of the payments are P plus I, so that's principal plus interest payments. Yeah, and that pretty much covers it.
Yeah, actually, and I think that helps actually as well. Can you explain also, and this is one of the questions, there is a hesitancy of some businesses to apply for it. There is a fear of going bigger, growing, and concerns around it. Can you explain how the loan guarantee program works in terms of mitigating the risk for lenders and facilitating access to financing for businesses? How does it make like a difference? And I think there is this, it's a mental hurdle that people likely need to overcome.
Yeah, there's really two sides to that question. I mean, there's the side from the entrepreneur perspective, and then there's the side from the banking perspective. So from Meridian, let's start with Meridian's perspective. For us, having that guarantee in the background from BDC is what's allowing us to really move up that risk curve and take on a little bit more risk appetite than maybe what we would be typically interested in taking on. So you've got a financial partner that's here and willing and able to take that leap with you. From an entrepreneur perspective, I mean, there's a bit of confidence, but there's a plan, right? Like for us, even though there's no DSR test, we implement what we would call like a smell test. So we're still here to help you as an entrepreneur. And the last thing that we would want to do is set an entrepreneur up for failure. That's not the business that we're in. So as an example, let's say an entrepreneur came in and said, hey, I'd really like to get a $100,000 loan. I think I fall within the boxes. Here are my last 2 years of financial statements, but in the last 2 years, they never generated more than $20,000 in annual revenue. We would turn around and say, you know what? We don't think a $100,000 loan is for you because you haven't, generated that much in revenue in the last 2 years. Have you considered, maybe a $25,000 loan? Or what are your plans? Are you expanding your product line? Let's talk about what you're doing today, because obviously financial statements are historical. It's a historical guide and not necessarily, hey, what's happened in the last 4 months. So there's a story that goes along with it. And I think that if an entrepreneur can tell that story and is confident in the story that goes along with the ask, then that should mitigate your nerves for applying for the program.
I think it's an excellent point. And Brian, you brought up the topic of story. Chelsea, I'm going to ask you, you have worked with this loan. Any success stories or that you would like to share of someone where they have benefited from this loan guarantee program? We don't need to name names of businesses. Well, we couldn't anyways, but anything where you maybe say like, here's a highlight that really made a difference. And that's, it was good to see.
Absolutely. Yeah, there is one that pops into my mind of members that were actually introduced to Meridian through the Innovation Hub in Niagara. And this particular business, they provide software solutions for social media platforms. So their business tracks experiences across categories such as travel history, retail, service industry, things like that. And they were actually looking to switch to a financial institution where they can build a relationship with. They found that the relationship that they had with their past financial institution was more transaction-based, and they wanted to actually build a relationship with somebody. So one of our small business advisors on the team, they engaged with the member to find out what exactly they were looking for, how this loan could benefit them. And they actually decided that the Accelerator program was a good fit for them. They fit into all the categories. And our advisor actually introduced them to an accountant that we work with as well, that was reliable for the member to use. So they got the new relationship with the accountant as well through coming to Meridian. And this accountant was actually able to prepare the financial statements that they needed in order to provide to us to apply for the loan. So the member had just been using QuickBooks on her own before, and she wanted to get more formal statements as well, just for her own records. So the accountant was able to prepare those necessary statements. They actually did it really quickly within a week's time. And the member was able to apply for the Accelerator loan. They had a quick turnaround, and we were able to successfully offer them this loan. And they also got additional revolving credit as well, a line of credit and a Visa card. So that will further assist their business. And yeah, so through this relationship, our business advisor had introduced these new members to the Chamber of Commerce, but in Burlington, that's closer to where they live. But they were able to join the Chamber of Commerce, and they got to take advantage of the OCC Affinity program, which Meridian partners with the local chambers for, and they ended up getting discounted banking as well. So it kind of checked all the boxes for this member. They got the discounted banking, they got the Accelerator Loan, the line of credit, the visa, they're introduced to an accountant, and best of yet, they have a designated Meridian rep to work with, to build a relationship with. So I think that was a pretty successful situation for one of our members.
That's an extraordinary story. And I think it also looks at that the financial institution is not just what we are always, it's not just only transactional. It's actually building a community and building a relationship and being also a connector in the community to assist the business. So it's a great story. Brian, I'm going to turn it over to you just for 30 seconds of final closing comments on this webinar.
Yeah, you know what? I am really, so part of my role is I operationalize and administer new programs. We have a whole host of them at Meridian. This one in particular really excites me because it's really a first of its kind, and it's focused on issues that exist in our communities today. And I mean, it's one thing to say, yeah, I'm going to focus on these issues, and yeah, I'm going to do something, but this one's actually doing it too. Like, the data is telling us that it's working. Like, this is, it's filling a need. It's absolutely filling a need. And, you know, we are one of 2 financial institutions right now that offer it. So we've got a bit of a competitive advantage, which is nice for us. I'm just really excited about this program.
Yeah. And you know what? It also makes us look at, it's like our role is bigger than we often make initially. And it's bigger in our role in the community, in building the community, in the business community that we want to support at the same time. So thank you very much for Meridian Credit Union for doing that, for bringing this program forward, for powering this webinar and this session, and all the expertise that you have shared with us. It was a real privilege actually to spend the last hour with you. And to all of our participants and attendees, thank you for being with us. We always appreciate when you tell us like ideas of webinars that you want to see. So please feel free to connect with us at any time at info@gncc.ca or mishka@gncc.ca. We'd love to hear from you. So thank you, Chelsea. Thank you, Brian. And thanks to Meridian Credit Union.
Thank you.
Thank you.